This is the Asia Trade. I'm Shery in Seoul. These are the top stories that we're following this hour. Asian stocks set to extend Wall Street's longest rally of the year. Investors adding $3 trillion to U.S. equities since this month's lows. Seven & I to urgently review a takeover bid from Canada's Circle K owner in what could be the biggest foreign buyout of a Japanese company. And President Biden set to headline the opening night of the Democratic Convention, formally stepping aside for his deputy in the race for the White House. And I'm here in Seoul, of course, very much focused on the Bank of Korea's rate decision coming up on Thursday. We're watching the Korean economy very closely, as well as the financial markets here. But take a look at the markets. This is the setup across Asia right now. We are seeing, of course, a little bit of upside given the rally that we saw on Wall Street overnight. We're talking about the S&P 500 gaining for 8 consecutive sessions. And right now we're seeing Japanese futures also pointing to the upside. And this, of course, after stocks fell. In the previous session, we had the Japanese yen rallying more than 1% against the U.S. dollar before trimming the advance. It did lead those gains among G10 currencies. We're also watching for the minutes from the RBA minutes to be released later today. Take a look at the Wall Street close because, as I said, it was another day of gains. The longest winning streak in 2024. The rally topped $3 trillion from this month's lows. Tech and also small caps on the Russell 2000 all gained ground. But, of course, what we're watching right now, Haidi, is not only the economic prospects of South Korea as we head towards that rate decision on Thursday and inflation being really hotter than expected for the month of July, but also the fact that we continue to see market optimism by investors on the Korea Value Up corporate program. Because, as you know, we have seen these lower valuations than global peers for South Korean companies, and that's really what investors will be watching out for. But in Japan, of course, big news coming up from the M&A side of things.
Yeah, absolutely. And, you know, it's interesting. I feel like the Japan story, the sort of revival of Japan Inc. and the equity story there is also part of why adjacent Korea has sort of gotten this boost as well as to what potentially this value up program could really materialize in the opportunities if it manages to have some of the same success that we've seen in Japan. But as you said it, some of these changes in rules have, as well as, of course, the weakness in yen, have really made Japanese M&A and in particular attempts by foreign companies at takeovers in Japan much more appealing. And of course, we're watching Seven and I and whether there is a response. The company says, of course, it's going to comprehensively review the proposal that it's received. But it's really a number of different mega deals as well across the consumer industry as well, right? Not just Seven and I, of course, soaring on Monday with that takeover proposal from the owner of Circle K, but also after the confectionery maker Mars agreed to buy Kellanova, which makes Pringles, chips and Pop-Tart pastries in that almost $36 billion deal. A lot of interest being attracted as a result of shareholder activism as well. Let's get some more from our Chief North Asia correspondent, Stephen Engel. And Steve, you actually profiled Seven and I earlier this year. You interviewed the CEO. How significant is this so-called friendly offer?
Yeah, it would be a significant deal, obviously, not only the biggest takeover of a foreign company in Japan, but also one of very few on record. Of course, Seven and I is part of the fabric of daily life in Japan, running those ubiquitous 7-Elevens. They have them all across Asia as well, from Taiwan to Thailand, here in Hong Kong and elsewhere. Also, of course, in the United States, where the brand actually began many decades ago, but now is run by the Japanese company, the holding company Seven and I. You know, Ryuichi Isaka is the CEO and the president and executive director whom I interviewed in the headquarters earlier this year. And again, that was fresh off, rebuffing the activist investor Value Act Capital, which has been trying for quite some time to unlock value and been suggesting that Seven and I and Mr. Isaka here, there I'm meeting him in his headquarters, to basically spin off the convenience store brand because they also have underperforming assets like the department store Ito Yokodo, as well as the Japanese side of the Denny's restaurants and others. Value Act has been trying to get a seat on the board. They've been trying to get, unlock shareholder value but he's resisted, and he's been talking about his own M&A and building out more stores around the world, including in the United States, where last year they did buy the convenience store operations of the gas stations across America of Sunoco and Speedway. So he had his agenda as well. But now this really throws a very interesting twist into this, because it's about unlocking shareholder value. And can Couche-Tard do that? Right now, Couche-Tard is worth about 9 times more in enterprise value per store than Seven & I just have some numbers that kind of compare the two companies. Couche-Tard and Circle K, they own Circle K. We all know that ubiquitous brand as well. But it's much smaller. Seven & I around the world has 85,000 stores. Couche-Tard and the Circle K and other brands has about 16,700 stores. But the market value of Seven & I is just $38.5 billion US after yesterday's close. Couche-Tard's market value is $58.5 billion. Seven & I has less debt. Seven & I has more cash, but yet their market value is not as high. We have not heard any reaction yet from ValueAct Capital, but I assume they are looking at this very closely and interestingly.
So you said it, right? I mean, Couche-Tard has made no secret of its global M&A ambitions, but at the same time, the caveats are Couche-Tard is smaller than Seven & I, and really these foreign acquisitions in the Japanese market are really rare.
Very rare indeed. And this could potentially, of course, face antitrust scrutiny. It will face antitrust scrutiny in the U.S., Canada, Japan. And again, you have to really see whether the Japanese owners of Seven & I are going to push back on this. But Alain Bouchard, the owner of Couche-Tard, has been eyeing 7-Eleven for years. I think he tried back in 2005, was rebuffed. He moved his sights to Carrefour. He was rebuffed there. He did buy some convenience stores from Total Energies last year, but he is on. He doesn't make any bones about it. He wants to go on a global M&A push, and Seven & I, with its 85,000 7-Eleven stores around the world, he's zeroed in on that. We'll have to see, though, if this friendly, non-binding proposal is going to be welcome by ValueAct, as well as those individual shareholders of Seven & I and Ryuichi Isaka himself.
Our Chief North Asia correspondent Stephen Engel there with a potential largest merger when it comes to acquisitions in Japan. Let's get more perspective on the broader markets. Here in South Korea with me is Daniel Yu, is head of global asset allocation at Yuanta Securities. It's really great to see you in person here in Seoul.
Great to see you.
And it's a beautiful day. We were just talking about this optimism when it comes to the Japanese markets. We've seen more M&A potential in that market. It's really interesting that Korea has sort of tried to do the same in the sense of really helping investor value with the corporate value up program. How do they compare?
Well, clearly, if we are to see the level of the dividend payout ratios and also the stock buyback and cancellation, if it actually happens as what Japan have done, we will see some of the increase in the share prices for specific stocks. But we really haven't seen it yet, right?
I know. I mean, the optimism that I see in Japan doesn't seem as high here in South Korea. Is that the right sense that I'm getting?
I guess so, because if you think about the corporations, they always have to think about the inheritance tax or a lot of the corporate governance issue itself. The corporation has to decide whether they're going to pay out the dividend or stock buyback and cancellations. If they are to lose their ownership of a company, it might be very difficult. So I think that there got to be some kind of regulatory changes or the tax benefits or any type of things that needs to be done. We think that it is going in that speed. Unfortunately, for the time being, if you look at the percentage of the total payout ratios, it's only about 25% for Korean stocks, whereas Japan, I think it has risen to over 50%. If you look at Taiwan, it's like almost 60%. U.S. is like 97%, right? So clearly, you need to have that kind of payout ratios to allow the revaluation of the stocks.
Can the strength of just a few South Korean companies like Samsung, SK Hynix driving that AI boom sort of, can they make up for that shortfall in the optimism, in the changes in the regulatory segment?
Right. I think that we've got to look at that separately. Okay. If we look at the Hyundai Motors Group or the Samsung Electronics, Samsung Group, if you look at, they're the driver to the main so-called growth industries, including the AI-related, as you said, also the electric vehicle side. So that's all growth sector, right? So as long as the growth in the global market is happening on that area, they will do fine. But in terms of whether they are going to pay out the dividend, that's a different story, right? The ownership structure is not necessarily that strong per se. So I think that you need to have some kind of regulatory benefit for them to pay out. So I think that's a bit of a separate story. So we look at Korean stock as a bit much more of a cyclical stocks, where the cyclicality of the current point is that very positive for the Korean stocks.
Given that we are expected that rate cut from the Bank of Korea to come at some point, perhaps not in this meeting this week, but Bloomberg Economics puts it in October. What do you think?
Might take some time, given the fact that if you look at the leverage ratios, even U.S. cuts interest rate to the level of as low as 4%, Korea is already at 3%. And if you look at the consumer debt to GDP ratios, it's one of the highest level of country. So it's a bit difficult. You need some kind of restructuring for the consumer. So I think that, yes, they will lower interest rates for the fact that we are much more dependent on the real estate prices.
I know what's going on with the property market here in South Korea. I mean, it's always an issue. It's perennial.
Right. I mean, because its leverage is very high. If you look at consumer debt as GDP, is almost 100%, and interest rate is already at a very low level. So you are really supporting the property market through a low interest rate environment. I think it's not as poor or bad as China. If you look at the leverage ratio, is even more on the basis of the disposable income. But I guess it's something that need to solve. And also, if you look at the Korea as well as China are faced with the population decline.
Sure.
Right. So all that issues all pile in.
The Democratic National Convention in the U.S., of course, kicks off this week. How does the fate of South Korea, Japanese markets, and broader economies, I guess, get affected depending on who comes victorious in November?
Very difficult question. I tend not to become...
I guess if we take a look at perhaps potentially trade policies towards these Asian economies.
In any case, I think Korea has decided that they're much more focused towards U.S. than China. It doesn't matter who becomes the president. And also, I think that it is a very important fact that U.S. is focusing on what they're good at, which is the AI industry, the IT sector, as well as bio sector. If you look at Korean companies, they're all in line with that. So I don't know whether Trump or Harris is going to be negative. I think it's positive, the fact that Korea is moving towards what U.S. is doing. So clearly, they're much more favorable to building plants in U.S., focusing on trying to have market share there. I think only concern that I have is that Korean companies are a bit laggard to the software industries of the AI. Right. So I think we need to focus much more also. If we can build some kind of relationship with the U.S. that we can benefit on the software industries, then that will be positive. Whoever becomes the president, if they give some favor.
The longest rally on the S&P 500 right now of the year, do we end up higher or lower in 2024?
I think definitely lower. That's my view. I think that the hiccup that we saw in July, August is very overplayed. Because of the end carry trade, disappearing going forward, but I think it's coming back. Also, we have interest rate cut expected. Lower interest rate environment does provide the liquidity, and globally, I think liquidity is a rising trend. So therefore, we estimate that S&P 500 by the end of the year will be probably well above 5,800. Maybe.
So we end up higher, not
yes.
lower. Okay. Anyways, it's really good to see you and join you here in Seoul on a beautiful day. That's Daniel Yu, head of global asset allocation at Yuanta Securities. Of course, Bloomberg will be on the ground in Seoul all week. And coming up on the Asia trade, we also have insights on the U.S. election. President Biden preparing to speak at the Democratic National Convention. We also have more on the bid for 7 & I in what could be the biggest foreign takeover of a Japanese company. And Australia Ahead focuses on the challenges facing universities amid crackdowns on international students. This is Bloomberg.
This week, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all week on Bloomberg Television.
Economists expect China's commercial banks to keep their loan prime rates unchanged today after making that 10 basis point cut in July. Let's bring our China correspondent in low for a preview. So the approach seems to be, supportive but easy as she goes, right? There's no chance of a surprise today?
Yeah, well, look, the PBOC had refrained from announcing the MLF rate last week. They had delayed it to August 26, and we think that's an intentional move by the PBOC to try to de-link the loan prime rates from the MLF rate by announcing the MLF rate after the loan prime rates. And last month, we already saw the loan prime rates being cut by 10 basis points each after the 7 days reverse repo rate will also cut by 10 basis points. In August, there had been no change to that short-term benchmark lending rate, and so we expect the banks to keep their loan prime rates steady at 3.35 and 3.85 for the 1 year and 5 year respectively. We are expecting the PBOC to cut rates later in the fourth quarter, perhaps in September or October after the Fed goes first. Some economists expecting between 10 to even 30 basis points cut later this year, and that would then open up more room for the banks to also lower their loan prime rates as well.
We're seeing that sort of signal being given across the broader commodities complex,
the commodities
right?
market.
Potentially just... yeah, Shery, really just kind of hinting at maybe we're at the beginning of this credit crunch.
Yeah, I mean, last month we saw these very weak numbers when it comes to credit growth, the first contraction in 19 years when it comes to new loans to the real economy. It's reflected in the commodity prices. If you look at oil, that has fallen the most in 2 weeks. Yes, that's partly because of uncertainty over, potential retaliation by Iran on Israel, but it also reflects the softness in the Chinese economy, coupled with that decarbonization push that is reducing demand for traditional fossil fuels. But where you see the most movement in commodity prices is in iron ore and steel that has dropped by 30% and 25% respectively. Iron ore is, of course, a key ingredient in making steel, and China is a major producer and consumer of steel. The drop in those prices suggests, again, the weakness in the Chinese economy, the weakness of the property sector as well, and softness in government-led investment into infrastructure, as we can see from the very slow pace of the issuance of these local government special bonds, which has always been key to infrastructure investment in China. And not to mention, you have consumers not really spending, industrial production growing at a slower pace, and that credit growth numbers I mentioned earlier, some economists say that is a clear sign that companies are focusing more on deleveraging rather than borrowing, and it could kick off an unhealthy, vicious cycle of more deleveraging, less borrowing, less production, and reduction in capacity expansion. And some economists warn that that deleveraging cycle could soon replace the property sector as the key contributor to the next round of commodity sell-off.
Bloomberg's China correspondent Min Lo there. And staying with China, today marks the release of a major video game, Black Myth Wukong. The title was years in the making by a Tencent-backed developer. Our tech reporter Annabelle Jewellers joins us. And what's the significance of this, and why is it sort of gaining so much buzz?
There's really so much anticipation around this, and it really stems for a lot of different reasons, but a primary one is that this is being seen as China's first ever AAA game launch. Now, there's sort of an informal hierarchy of sorts in the gaming industry, but essentially AAA titles mean you're either a mid or a big-sized developer, you've got a big team, and you have big marketing departments as well. So Black Myth, which is actually based on a Chinese novel, Journey to the West from the 16th century, but you're basically talking about the equivalent of a Hollywood blockbuster here, except it's not Hollywood. That's also significant as well. As I said, it's China's first ever AAA one. This is a space that's typically been developed or dominated by developers in Japan, the US, Europe, and the game, as you said, coming from China. It's from Game Science. It's based in Shenzhen or headquartered there and backed by Tencent.
What's been the reception so far?
So there's the critic side, and then there's also just the gamers themselves. And what we understand is that the pre-demand or the pre-launch purchases or subscriptions has been really strong. That's also significant because a lot of Chinese games have traditionally been free-to-play titles. So essentially, you can download it, and then the game developer makes money from in-game purchases. What's also been significant is the critical response, because there's the aggregator site Metacritic, which brings together a lot of different professional gaming critics, and that's got an 82, this game, on that. Again, puts it amongst the top-ranked Chinese games ever. So again, it's that very critical reception we're getting from the players, the critics themselves.
How much of a boost does this mean for Tencent then?
Well, it sort of depends who you're talking to in the industry. I've been speaking with a few different analysts about this. One of those is Wei-Sun Ling from UBP. He's saying that, yes, we can expect to see Tencent picking up and getting more gaming revenue into the year end, perhaps into the first quarter of next year. And there's different reasons for that. Not only you've got these new titles that are coming online, you've also got very low base effects, because during the COVID years, not only did you have people not buying games, there was also not new games being developed because China wasn't issuing licenses. So the environment is really changing, and Tencent can take advantage of that. How long that extends for will be very difficult, because not only will those base effects be higher, you've also got pretty much a finite amount of gamers in the space, 500 or 600 million different people worldwide. It's very difficult to grow that pool, so you've basically got to continue developing very high quality games or selling them for more money.
Annabelle Jewelers there in Hong Kong with the latest on gaming. More ahead on the Asia trade. This is Bloomberg.
Some of the stories we're following on the corporate front today, and Bloomberg has learnt that General Motors is cutting more than 1,000 software engineers, with the majority of the layoffs taking place in the US. The company confirmed the cuts in a statement without specifying how many people were affected. GM had been hiring rapidly in the space in recent years as part of its push into EVs and self-driving cars. GoPro shares gained after the bell has unveiled plans to cut about 15% of its workforce starting in the third quarter. The action camera maker has 925 full-time employees. GoPro sees a restructuring charge of $5 to $6 million, with the majority of it expected in the last quarter. More ahead on the Asia trade. This is Bloomberg.
This is the Asia trade. We're about 30 minutes away from the major market opens. Here are the top stories that you should know. 7&I says it will review a takeover bid from Circle K owner Alimentation Couche-Tard in what could be the biggest foreign buyout of a Japanese company. A merger would create the world's top operator of roughly 100,000 convenience stores. Japan looks set to lead Asian stocks higher at the open after the S&P 500 notched its longest winning streak since November. Goldman Sachs sees the U.S. rally continuing in coming weeks, saying the bar for being bearish is high. And the Democratic National Convention is underway in Chicago, capping off a whirlwind month for the party. President Biden will address the opening night to rally supporters as he formally steps aside in favor of Kamala Harris. Jody Schneider is political news director for Bloomberg TV and radio, and she joins us now from Chicago. Jody, great to have you with us. It seems the president is speaking today, but then he's leaving on a family vacation right away. He doesn't really want to take the spotlight away from his own vice president.
Yeah, that's right. He would have been speaking, of course, a little more than a month ago when he was still, the nominee, the top of the ticket. He would have been speaking on Thursday night. Monday night tends to be reserved for, some of the party's people who've been important in the past and maybe some people who will be important in the future, but it's not the big names. But of course, tonight, given that he stepped aside in favor of Kamala Harris to run as president, he will now be talking about her from the Monday evening perch. We've been told by some of his advisors that it's not a farewell speech. He still has until the end of the year, until January, to be president, and he intends to do that. This is not a farewell speech, but this is a speech in support of the candidate, Kamala Harris, his vice president. So it could be moving, touching. They did go on the campaign trail together last week and said a lot of nice things about each other. One would presume he'll try to rally the troops, maybe talk a little bit about his record, but this is really supposed to be more about her than about him in his speech tonight. Jill Biden will also speak. We'll also hear tonight from Hillary Clinton.
It's very interesting. Obviously not wanting to take that spotlight, very much the passing on of, the torch, if you will. But is there really a critical role for President Biden to play in terms of the demographics of voters that he really engages and compels engagement with?
Yeah, he is still very popular with voters 65 and older, and he is viewed as kind of a mainstay of the party. He's been going to these conventions for more than 50 years. And so I think there's that part of it, the old guard, as you said, that passing of the torch. It's important. The optics around this are very important. And also it's important to show unity. Democrats this week are trying to show that even though it was kind of awkward, if you will, to push out President Biden after that disastrous campaign performance, that debate performance in late June, and it's only been a month since he stepped aside in mid-July, that they're together, they supported him, they believed in him, he's done a good job, but it's time for someone else, and that someone else is Kamala Harris. We're going to be hearing a lot of that. We're going to be hearing a lot about being unified, just as the Republicans tried to show a unification, had a unification effort at their convention last month. There will be a lot of talk about this, how there is not a kind of divisive feeling, even after some of the earlier issues about some who wanted Biden to leave and others who did not.
And Jody, Donald Trump also trying to regain the limelight with an aggressive schedule, including, of course, a conversation with Bloomberg News itself. He defended his stance on the Federal Reserve.
He did indeed. He's barnstorming the country, as you note. Usually the nominee whose convention it's not stays away and kind of keeps quiet, but Donald Trump is not having any of that. He is having campaign events in swing states. He's doing interviews, and he did talk to Bloomberg News today and basically said he doesn't think it's a problem, that he wants to see some changes made in the Fed. He thinks that a presidential nominee and a president should be able to do that.
Jody Schneider there, political news director for Bloomberg TV and radio, with us in Chicago as we continue to look at sort of everything that's going on this week with the Democratic National Convention. Let's bring Jared Mondschein, who's a director of research at the University of Sydney's US Studies Centre. Jared, great to have you with us. So the sort of question going into this was, with the sort of switchover bump that Kamala Harris has had, and an extraordinary level of engagement, particularly across social media, and sort of capturing the zeitgeist, if you will, in particular of some of the younger voters. Do you think the challenge now is being able to sustain that momentum as the Trump camp sort of recovers from what they say is, being blindsided by the switching candidates?
That's exactly right. So the challenge for Harris is, yes, she is leading in some national polls, but we all know that if national polls elected a president, then Hillary Clinton would have won in 2016. What they're focusing on is the swing state polls. And in a number of key swing states, Kamala Harris is ahead by about 4 percentage points, according to recent polls. But what I'm focusing on, and I think what the Harris campaign and Trump campaigns are focusing on as well, is the fact that this has happened before. Back in 2020, Joe Biden was ahead of Donald Trump by 6 points, 2 points, 1 point, every single time in these key swing states, whether it be Michigan, Pennsylvania, Wisconsin, or Nevada. Trump significantly cut through what we expected to be a major win to make it a far closer win. So, for example, in Pennsylvania, we've heard about how much time J.D. Vance is spending there. Biden, in the weeks ahead of the race, of the election, was ahead by 6.4 percentage points. But then on election day, went down to 1.2%. So I think the Harris campaign and the Trump campaign are both saying that this is far from over at this point. And Harris will need to sustain that momentum and do far more if she wants to be victorious in November.
And she does have particular vulnerabilities, right? There will be a real picking apart of her record when it comes to the border, for example. And we know that the former President Trump is going to be spending quite a lot of time both at the border and on this topic. What do you see as her vulnerabilities and the risks when it comes to messaging here?
Yeah, I think the border is it. In the polling world, you have what you call the most important problem. And a number of polling organizations, and including us at the U.S. Study Center, we ask folks, what are the most important problems that you think define this race that you want the next president to sort of tackle, to address? And it is the border, it is economy and inflation, and it is crime. And on all of these areas, what we're seeing, I think, is the Harris campaign trying to do more on this, not just to rebut that, but actually to own those issues. So on crime, they're really trying to play up her history as a prosecutor and show just how aggressive she was in enforcing the law, saying that she is the law and order candidate in many ways, and really taking that mantle from the Republicans who traditionally define themselves as the law and order candidates. But then on the economy, you saw the first major policy speech from the Harris campaign so far, where she went further than the Trump campaign in terms of championing, for example, the child tax credit. Instead of $5,000, which J.D. Vance has said, they're going to do $6,000. And talking about price controls on groceries, really trying to focus on the family and inflation issues that everyone is saying is the most important problem, or one of the top 3 most important problems. And so I think that's what they're going to be hitting over and over and over again in the days to come.
And yet, when it comes to China policy, do we expect anything markedly different from these two candidates, Kamala Harris versus Donald Trump, especially given that there seems to be broad consensus in Washington in this more hawkish view against Beijing?
Yeah, there is definitely a sort of bipartisan consensus on the hawkishness towards Beijing, but they definitely have different approaches to it. So I think in the Trump administration, we saw a very heavy emphasis on trade, and on him wanting to sort of see the conclusion and the success of that phase 1 trade deal that we heard so much about. This is something that is consistent with Trump over many decades, his being very laser-like focused on trade issues. Back in the 80s, it used to be with Japan, and now it's with China. I think with the Harris campaign, we're seeing something different, especially with someone like Tim Walz, who has spent a lot of time in China, lived there in 1989, shortly thereafter, after the Tiananmen Square massacre. And I think it is really personal for him. Him having seen human rights issues up close and personal, having met with the Dalai Lama, having met with democracy activists in Hong Kong. I think the human rights focus is something that we'll probably see a bit more of from the Harris campaign. But as you said, there is structurally, I think, a bipartisan consensus that the status quo with China is just not good enough.
And given where these two candidates stand, what are we expecting in terms of impact towards other countries that are not directly involved in the conflict, such as where I am today, South Korea, or where Haidi is in Australia?
Yeah, the U.S. allies and partners like Korea and Australia, I think, are going to play a huge role no matter what. And I think it's something that at the U.S. Study Center, we did a big analysis of the options back in May of Biden versus Trump. And we looked at the differences on a number of issues, whether it be trade or foreign policy or military spending. And there are definitely some differences, but we found that in this publication we called Red Book, Blue Book, that actually the longest and most sizable component of this for especially Asian allies is the Purple Book. Basically, what stays the same no matter what? The structural issues that lead the U.S., regardless of who's elected in November, to see the same policies going forward. And that includes working with friends and allies to push back against China's more revisionist and destabilizing tendencies in the region. And yes, Donald Trump is not known for loving friends and allies, but if you look at his objections to allies, U.S. allies, I think some of them have some merit. There's a reason that his criticism of NATO is actually an applause line with Republicans. This is because they promised that they would spend 2% of their GDP or more on military spending, and so many of them haven't, including Germany. Whereas if you look at Asian allies, on the other hand, including Japan and Australia, their military spending in particular has significantly increased in many ways. And in many ways, I would say that no matter what, Australia and Japan will likely fare well, regardless of who wins in November.
Mondschein, Director of Research at the U.S. Study Center, it's great to have you with us. Thank you. And these are some of the other geopolitical stories that we're following at this hour. U.S. Secretary of State Antony Blinken says Israel has accepted a ceasefire proposal to halt the war in Gaza. Blinken says the next step will be for Hamas to say yes to the plan. The accord builds on a proposal President Biden put forward in May that could pave the way to a permanent truce in Gaza. Blinken will next travel to Egypt and Qatar to discuss what their leaders are hearing from Hamas. President Volodymyr Zelensky has urged Ukraine's allies to lift restrictions on the use of their weapons to strike inside Russia. He says his army's two-week incursion has called into question Vladimir Putin's threats of retaliation. Zelensky says his forces now control more than 1,250 square kilometers of Russian territory and will continue to gradually expand in the Kursk region.
Coming up, we'll be discussing the bid by the Canadian owner of Circle K to buy 7-Eleven in what could be the biggest foreign takeover of a Japanese company. Asymmetric Advisors is along with us next. This is Bloomberg.
Our top story today, Circle K operator Alimentation Couche-Tard is making a proposal to take over rival and 7-Eleven owner 7 & I. A potential deal would mark the biggest foreign takeover of a Japanese company. It would also create the world's top operator of roughly 100,000 convenience stores. 7 & I says it's currently reviewing the proposal. Let's bring in Amir Anvarzadeh, Japan equity strategist at Asymmetric Advisors. Amir, great to have you with us. So what does this really mean for 7 & I? Because as I mentioned, this would be incredibly rare when it comes to foreign acquisitions in Japanese markets. What's the likelihood of this going through?
Well, it depends obviously on the price, right? It's something we don't know yet. But from the past, from the management, the Iseki and his team, they have been somewhat reluctant to do the restructuring that's been needed. I mean, if you look at 7 & I as a conglomerate of retail operations, both in Japan and the 7-Eleven operations overseas, they've been under a lot of pressure from activist investors already to carve out the domestic supermarket operations, Ito-Yokado, York-Benimaru, Denny's, all that businesses, even Seven-Bank, which is part of the 7-Eleven group, and really focus on 7-Eleven, the franchise itself, which they're expanding. They have been expanding for the last 4 or 5 years, particularly in the last 4 or 5 years, where they bought Speedway and Sonoko operations and so forth. So I think that, obviously, the Ito family owns less than 10% stake in the company. So they don't have a majority stake to just say no. So if the bid is attractive enough, and it has to be attractive enough for the management to really consider it. And but looking at the debt structure of Couche-Tard, and if you look at the number of retail operations, look at the number of convenience store outlets that Couche-Tard has, only 16,000 versus 85,000 for 7-Eleven. It's almost like a reverse takeover, right? So it's although the market cap of Couche-Tard is much higher. So yeah, look, it depends on the cash component of the bid as well. But I think anything above 7 trillion yen, the market cap right now is about 5.6. But anything above 7 trillion yen, and the management would be under a lot of pressure, particularly by active investors that have invested in the company and have been pushing the company to restructure more quickly.
Okay. So price aside, when it comes to the structure of these two businesses, given some of the factors that you mentioned, given the fact that 7&i is much bigger than Couche-Tard, would this make sense for both sides? Could we expect more internationalization of the 7&i brand?
7-Eleven brand definitely is the focus here. I think the 7 and the I side of the 7&i is likely to be dropped by whoever buys the company. That's something that the company was going to do anyway. They were going to IPO the Ito Yokado and York Benimaru stuff and basically, carve it out. But the process is very, very slow. And I think a lot of investors have been somewhat disappointed with the pace of restructuring that 7&i have been doing. But the real focus is not the internationalization of the 7&i, but really the focus will go on 7-Eleven. And even the 7-Eleven stores in Japan, there's as you know, probably, there's a very saturated market in Japan in regards to convenience stores. So whoever takes over the operations, whether it's Couche-Tard or someone else, they're more likely to kind of prune the number of outlets in Japan, which are just too many. So yeah, that's the way I think it's going to kind of. But it does make sense from an outside point of view to buy 7&i because the stock is so cheap, right? If you look at the underlying assets that they have, they've got over $9 billion of cash and equivalents. So yeah, it has to be a very, very attractive bid, and I doubt the cash component will be big enough to get the management to look at it, and it might even become a hostile takeover. We don't know, but it'll be interesting to see how that kind of transpires.
Yeah, it's interesting, right? Because we know that this company has formed for these sort of audacious takeover attempts, right? For Carrefour, for example. But I do wonder, as a broader trend, you mentioned activist investors. We've seen them now swoop in post-sell-off to try and buy up more stakes and gain more influence across other Japanese companies. Is this sort of thing something that we're likely to see more of?
Yeah, look, one of the key elements in this acquisition, opportunity is the weak yen, right? And the weak yen is universal in Japan. So, weak yen has made Japanese assets a lot cheaper, in a sense, not only 7&i has been very undervalued relative to its underlying assets. And, some of them liquid, some of them not so liquid, but, very undervalued. But also the weak yen itself has made Japan a very attractive target for some of the operators that are looking in their segment and saying, well, these guys are pretty big. 7-Eleven, from Ito Yokado's 7&i perspective, 75% of the revenues are coming from outside. So only 25% from Japan. So it's a very international operation already. And I think it's a very opportunistic bid, to be honest. And the question, I have my doubts whether,
No, I was going to ask, is it worth it, right? Because they need to be very smart at being able to extract the scale economies that Couche-Tard wants from this. 3.8 billion is the projected operating profit for Seven & I over the next financial year. Is it worth the capital outlay here?
Yeah, I mean, because, you know, if you look at it versus the underlying assets, as I said, it's very cheap. And, you know, there's so much room to restructure. One of the big elements of restructuring for Seven & I has been to get rid of some of the underperforming supermarket operations. They've sold the department store operations last year, and they have announced that 20% of Ito-Yokado stores will be shut down over the next few years. And then they announced that they're going to be IPOing the Ito-Yokado operations as well. So yeah, there's a lot of room for improvement in terms of profitability. The recent earnings have been somewhat disappointing because the U.S. operations have been somewhat struggling. I think U.S. non-discretionary spending has been coming under a little bit of pressure, and particularly in the roadside stores, they've been struggling a little bit. But over the longer term, I mean, you know, I think it's definitely worth chasing this bid. But the question is, can you afford to?
We'll be watching Amir Anvarzadeh. The price is very important in that deal. Japan equity strategist at Asymmetric Advisors. Good to have you with us. We have more ahead on the Asia trade. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, we are watching developments from the Jackson Hole Economic Symposium, watching for the narrative that's being spun by the Fed and whether that sort of links into market expectations of easing before the end of the year. We're also watching Korea, of course, where Shery is today. The Bank of Korea decision is on tap, as well as a number of other central bank decisions, including Bank Indonesia and the central bank in Thailand as well. In the meantime, we are seeing a pretty steady setup when it comes to Asian equities, looking to get that boost from the Wall Street session overnight. Take a look at what we're watching when it comes to the start of trading in Japan. We are expecting to see sort of some of that flow through of the positive sentiment. This is really volatility continues to calm down. Let's get you straight to the market open, where we're expecting to see gains being led by the Japanese benchmark. It was really a buoyant session on Wall Street as we had the S&P 500 advancing for an 8th straight day. This is now the longest winning streak this year. We're seeing the start of trading in Japan up by just about 1.25%. Equity futures certainly suggested that we'll be seeing that bullish mood continuing into the Asian session. That US rally, I should point out, has already topped $3 trillion from the month's lows. A lot of this on bets that the Fed will signal that it's ready to start cutting interest rates imminently. We're also watching, when it comes to the biggest story out of Japan, of course, the role of activists and how they've continued to buy more Japanese stocks after the first rout since 1987, snapping up those stocks and trying to sort of gain ever more influence. So that suggests that perhaps when we look at cases like Couche-Tard seeking to buy the owner of the 7-Eleven chain, and of course the Mars takeover attempt as well, that this is not going to be sort of an idiosyncratic case, that perhaps we'll see more of these sort of quite audacious proposals at takeovers to come. Circle K operator, of course, making that proposal to take over its much larger rival, the 7-Eleven owner, Seven & I Holdings. If it goes through, and it's a big if, of course, that would be the biggest foreign takeover of a Japanese company. So we'll continue to watch that story throughout the course of the day. As I mentioned, Bank of Korea is on tap this week. No expectations of a move. A lot of these central banks really watching to see what the Fed does. The cost be up by just about 1%. Some of the sort of governance measures that we've seen across Korea really boosting sentiment across that market as well. The Kosdaq tech stocks also doing quite well, up by about 0.1%. Unsurprising given that we did see tech leading those gains on Monday as well. That equal weighted version of the US equity benchmark hitting an all-time high. There are still these hopes that we'll see that broadening of this equity rally. Switching it out to Australia, and of course we are really in the thick of earnings season in this part of the world as well. We're seeing some more modest trading here at the start of the staggered session here in Sydney. The ASX 200 up by just about 0.2%. We're watching some of those big financials. Third quarter numbers up from ANZ, as well as sort of processing the trading update from Westpac there as well. We're also watching to see some more of the details being passed from the RBA meeting minutes of that August interest rate decision. We're also hearing from the RBNZ Deputy Governor Hawkesby as well, speaking at an event, Shery. So there's a lot going on, but in Japan, we're really focused on this one big story of the takeover.
Yeah, potential mega deal by Couche-Tard of 7 & I. And of course, we saw the stock jump in the previous session, more than 20% in Tokyo trading. Right now, untraded as of yet, but let's discuss what this merger could actually mean and bring in our Northeast Asia correspondent, Stephen Engel, with the latest. So, Steve, how significant would such a deal be?
It would be quite significant. It would be the biggest foreign takeover of a Japanese firm on record, and also one of few ever, really, because, again, corporate Japan has not necessarily been the target, or they've been the target, but they've not necessarily had many successful large takeovers like this, if it does come to fruition. Couche-Tard of France, the owner of Circle K, saying that they made a friendly, non-binding proposal, and also that 7 & I, the owner, of course, of all those ubiquitous 7-Elevens around the world, including the United States and all across Asia, and 21,500 convenience stores in Japan. They are considering and reviewing this proposal. But again, 7 & I met with Ryuichi Isaka back in, I think, February or March, earlier this year in the headquarters. And we, again, talked extensively about how or if 7 & I is going to unlock shareholder value as proposed by the activist investor Value Act. Now, 7 & I was able to rebuff that overture by Value Act to essentially remove Isaka from his position, as well as put their own representative on the board. They want to unlock shareholder value by spinning off essentially the more valuable 7-Eleven stores from the legacy department stores like Ito Yokodo. They already sold Sogo Seibu last year. They also have 7 & I Bank, and they also own the Japanese franchise of the Denny's restaurants. Essentially, again, Couche-Tard is coming in at a time when it has a higher valuation, but a smaller footprint. Couche-Tard is worth about 9 times more in enterprise value per store than 7 & I. But if you look at the number of stores around the world, 7-Elevens, there are 85,000 stores around the world. Couche-Tard and its Circle K and other brands have just 16,700 stores worldwide. But again, the market values are very different. 7 & I has a market value at the end of yesterday's close of about $38.5 billion. Couche-Tard, a smaller company, has market value of $58.5 billion. And 7 & I has more cash and less debt. But again, it hasn't been able to unlock that shareholder value. We did hear in April that 7 & I talked about spinning off, having a separate listing for Ito Yokodo. But again, that hasn't necessarily come to fruition yet. So they're reviewing it. It would be a very interesting deal that would have to pass antitrust regulatory approval, obviously, in the U.S., Canada, perhaps Japan. It's early days.
Early days, but can we see the start of this trend when it comes to just the impact that we see from activist investors? And of course, they've been such a big part of the Japanese equity rally story, right? Could we expect to see more of these kind of audacious takeover attempts as that pressure grows?
Yeah, I think you probably will. I mean, it's an interesting time right now with the Japanese yen still relatively weak, even though it has gained from when after it had weakened past 160 up to about 163 to the U.S. dollar, now about 146. But the trend as the yield differential with the U.S. and Japan narrows, the yen is starting to appreciate. Also, we've had that stock market rally in Japan. So these are all factors, of course, as global funds and global activists well, the activist investors are obviously looking for, in 7&i's case, looking for, restructuring and unlocking the value. But there are pools of money out there looking for opportunity in this market. So we could see more. And we all know Alain Bouchard, who's the spearheading Couche-Tard. He's wanted 7-Eleven. He's wanted 7&i for quite some time. He made his first overture back in 2005, was rebuffed. He moved on to try and get Carrefour. He was rebuffed there. He's been making no bones about the fact that he is looking for global M&A, and their exposure in Asia, their market share in Asia is only 1%, whereas 7-Eleven in Asia has about 31 to 35% market share. So this obviously is an opportunity for Couche-Tard to grow its Asia business, but also more than double its footprint in the United States.
Our Chief North Asia correspondent Stephen Engel, as we're now seeing 7&i trading in the Tokyo session and its downside of more than 10% at the moment. This is, of course, after gains of more than 20% in the previous session. We are seeing that pressure on the Japanese convenience store owner 7&i Holdings falling almost 8% at this point. But let's discuss the market environment in Japan and also broader Asia. With us now is Chetan Seth, APAC equity strategist at Nomura. Chetan, great to have you with us. I mean, we alluded to this backdrop of just more favorable environment for investors in the Japanese market, given the changes in corporate governance and now this potential huge merger when it comes to Couche-Tard and 7&i. We'll have to wait to see how that unfolds. But what does this tell you about really the environment that we're seeing in the Japanese market and perhaps some momentum going forward?
Well, obviously, I can't comment on single stocks. I mean, this is a corporate transaction. But I would just say that at a very high level, it just suggests that there is still a lot of value in Japanese stocks. And you can see this big company looking to acquire another big firm in Japan. And I think it just dovetails with what everyone's been talking about in Japan. There's a lot of focus on corporate governance, even from the regulators. There's a lot of focus on making sure that valuations of some of these Japanese stocks actually increase. So for me, that's the broader theme here.
Does that mean that we could see some more consolidation in this market as well?
Well, I think broadly for the markets, what's happened in the last, let's say, month or so, I mean, it really started with this broader theme that investors were quite concerned about the U.S. slowdown. Suddenly this soft landing versus hard landing debate emerged. That weighed on markets. But what we've seen in the last, let's say, 6 to 8 trading days is some bit of stabilization in sentiment. We've also seen better economic data from the U.S. last week. So that's, I think, eased some of these concerns around U.S. recession, which has also helped Japanese stocks. I mean, the key call here is that in the next 3-4 months, do we get a mild recession, or the U.S. economy actually manages to engineer a soft landing? Our baseline view is a soft landing, and if that's the correct view, we think the sentiment towards Japanese stocks should also stabilize. So on a multi-month view, we are quite constructive on Japanese equities, but in the near term, we could potentially see some volatility.
And some of the volatility could come from political and geopolitical developments, right? How big a risk do you think is uncertainty going into the US election?
I think, I hate to use the word uncertainty. It's an easy word for us, people who are in the business of giving opinions. But I would say this time around, uncertainty is really quite immense. And I would say there are 2 dimensions of uncertainty. One is just the fact whether just the view whether we'll see Harris or whether Trump wins. And then let's say if we have a scenario where Donald Trump is back as a president, what kind of policies he could embark on. Beyond that, there are also several questions around the sequencing of these policies, whether he goes after tariffs first or whether it's going to be more, let's say, immigration, whether it's going to be fiscal. So our baseline view is that ahead of U.S. elections, you may see stocks become a bit soft. That's what we have seen, at least in the last 4 out of 5 U.S. Presidential elections. But once this event risk is out, maybe you could potentially see a bit of a relief rally. And then it all depends on what kind of policies we see from the U.S.
It's quite interesting that you see India as sort of the leverage to volatility, right? You still say go overweight on India despite where valuations are sitting?
Well, we are quite positive on India, and we've consistently said that India is buy on any dips market. The flow outlook for India is extremely, extremely solid. Fundamental side, it's been quite resilient. And then let's say if you do have a scenario where Trump comes back and there is this focus on tariffs, especially on Chinese imports, you could potentially see some bit of weakness for the entire North Asian complex, which includes Korea, Taiwan, of course, including China. And our view is that India could potentially be a relative safety trade. I think there would be 3 levers of support for India. One is that this entire theme of tariffs will probably accelerate some of these supply chain shifts which have been happening in Asia, and India will be a key beneficiary of that. The second theme would be capital reallocation theme. So people will probably rotate out of, let's say, Korea, Taiwan. These are still, I would say, relatively more crowded markets in Asia. So that's the other theme which will help. And the third one is that India, by extension, has limited linkages, trade linkages to North Asia, or let's say it's less intertwined with supply chains in North Asia. So that gives another, lever of safety for Indian stocks.
You mentioned Korea. When it comes to valuations, that has been an issue, right? The so-called Korea discount, and yet you're overweight on this market. Do you think you will be able to overcome that?
I think in Korea, there are 2 broad themes we are quite excited about. One is clearly value up. I mean, the way we think about value up is it's going to be, it's a multi-month, multi-quarter theme. If investors are expecting that, suddenly in 6 months' time or a year time, Korea will achieve what Japan has, let's say, achieved in the last 6 to 8 years, I think that's a bit of an extension. But it's going to be, 1.5 step forward and maybe 1 step backward, but we'll still progress. The second theme for Korea, which we are quite excited about, is this theme around AI. And if you just look at the structure of equity indices in Korea, we think some of these hardware names are big beneficiaries of this ramp up in global capex, specifically on AI technologies. So our view is that corporate capex in the US, especially from the hyperscalers, will probably continue through 2025. So long as that's the correct view, some of the hardware guys, especially memory companies in Korea, will continue to benefit. So that's where our overweight call or more constructive stance on Korea is coming from.
Chetan, Seth, good to have you with us, APAC equity strategist at Nomura. We have more ahead on the Asia trade. This is Bloomberg.
This week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
Well, the Democratic National Convention is underway in Chicago, capping off a whirlwind month for Democrats after their switch to the Harris-Walz ticket. President Biden is expected to speak, rallying supporters as he formally hands the torch to his deputy, a White House and politics reporter, Gregory Cortes, at the DNC. And he joins us now. Gregory, great to have you with us. And of course, we typically see a post-convention bump for the candidates, but what is going to be the focus this week? And I suppose maybe more importantly, how do they sustain this momentum that they've had since the switch?
No, you're absolutely right. Usually you wait until after a convention for a candidate to get a big bump in the polls. And Kamala Harris, though, is enjoying that bump even before she goes into her convention. She has the momentum on her side. If you look at all of the polls, both nationally and in those 7 swing states that are going to matter the most in our electoral college system. And that's mostly because there was a lot of sort of depressed anxieties among Democrats who supported Joe Biden against Donald Trump, but weren't really enthusiastic about it. Now we have a new candidate coming on. She's a little bit younger. She represents the more diverse face of the Democratic Party, being Indian American and African American. And she has to introduce herself at this convention. She is the vice president, but she has to communicate how she's going to govern differently than Joe Biden. She's been joined at the hip with him for the past 3.5 years as his vice president. And so this week, we're hoping to hear a little bit more from her about how she will differentiate herself in the next 4 years if she's elected.
And lots of glitz and glam also at the DNC with celebrities making appearances. What are some of the highlights?
Yeah, I mean, a lot of them are, frankly, names that I'm not familiar with because I'm not on TikTok and YouTube as much as my 15-year-old is. So these are names that might not be familiar even to a lot of our Bloomberg audience, but they are important, especially to this Generation Z, which Kamala Harris is really hoping to energize and mobilize. They were among the most sort of depressed in their enthusiasm for Joe Biden, not just because he was an octogenarian, is an octogenarian, but also because of some of the issues globally, especially in Gaza. His support for Israel and the war against Gaza was really hurting him among some of these constituencies. Harris brings a fresh face to that, and you're right, some of these influencers, some of these celebrities, the star power, the glitz and glamour that really every Democratic convention brings. There is a real sort of cultural divide here where we saw in the Republican convention former pro wrestler Hulk Hogan, and now it'll be a completely different set of faces here in Chicago.
Yeah, there's a number of influencers and content creators that I've also not heard of either, Gregory, so you're not alone. But in terms of some of the challenges for Kamala Harris, you mentioned Gaza. We know that there's a number of pro-Palestinian protesters that are expected to be in Chicago this week to try and draw headlines back to the humanitarian crisis that's happening there. We know that she's been criticised for her ability to handle the border issues. Which one of these do you think will be her biggest vulnerability, and how does she navigate the messaging on that?
Yeah, I mean, I think she absolutely is going to have to navigate that and to try to split the difference, right? Because she has been very supportive of Biden's policy in Israel to date, at least publicly. And she's going to have to sort of express how she's going to continue her support for Israel because, there are a number of, Jewish voters, especially in some of these swing states, that are very important. They're also big donors to both Republican and Democratic campaigns. But there's also this sort of grassroots, sort of younger generation concern for the humanitarian situation in Gaza. And so to be able to say, we respect Israel's right to defend itself against Hamas, but at the same time say that Israel has to make significant changes in how they prosecute that war in Gaza. That's a difficult rope to walk here, especially as you have Donald Trump trying to push Democrats off that tightrope every chance that he gets.
White House and politics reporter Gregory Corti there at the DNC in Chicago as we continue to get the pictures of the glitz and glam. We'll be monitoring, of course, going into key speeches and announcements at that event. More ahead on the Asia trade. This is Bloomberg.
No matter your race, your creed.
Take a look at how 7&i is trading at the moment. We are seeing a big plunge in the stock, reaching double digits at one point in the morning session after we heard that Couche-Tard is seeking to buy 7&i. This is, of course, the $31 billion owner of 7-Eleven stores. At one point, it fell by the most since 2005. That's in the month of September. So after those gains of more than 20% in the previous session, we're down about 9%. So we're still in the positive in the last 2 days, but we'll continue to watch the stock as we digest this potential takeover deal. We're also expecting results from China's Xpeng and Kuaishou later today. Xpeng poised to report another quarterly net loss, while Kuaishou may see its earnings growth reach a plateau. For more, let's bring in our earnings specialist, Reina Sasaki. Reina, so a busy day for earnings season in China. Should we get started with Xpeng?
Yes, so Xpeng is kicking off Chinese EV companies' earnings results today. We are likely going to see another net loss for the second quarter results. And then the technology service revenue from Volkswagen remained being its earnings driver. However, it was likely offset by the EV's weaker margins, which was weighed by the lower selling average price that dropped around 10% on quarter amid price competition. And its SUV model G6 and a G9 likely led the volume gain. However, its sales momentum still lagged behind its peers, the Li Auto and the NIO that are reporting next week. And the meaningful sales recovery will hinge on its new EV model that was released this month. And we are paying closer attention to any announcement on price adjustment or any shift in the overseas strategies in response to EU tariff that was enacted last month.
Rena, we're also watching Kuaishou.
Yes. So Kuaishou is reporting second quarter results today, and then we're likely to see its earnings growth reaching plateau as it sees increasingly intensified competition and slowing growth in Chinese live streaming e-commerce. Its revenue for the live streaming segment fell around 14% due to the weaker consumer sentiment in China.
Reina Sasaki there covering some of those China earnings that we're looking ahead to. More ahead on the Asia trade. This is Bloomberg. We are about 30 minutes into trading here in Asia. These are the top stories you should know. 7&i says it will review a takeover bid from Circle K owner Alimentation Couche-Tard in what could be the biggest foreign buyout of a Japanese company. A merger would create the world's top operator of roughly 100,000 convenience stores. Japan's looks set to lead Asian stocks higher as we get into the trading day after the S&P 500 notched its longest winning streak since November. Goldman Sachs sees the US rally continuing in coming weeks, saying the bar for being bearish, I should say, is high. And the Democratic National Convention is underway in Chicago, capping off a whirlwind month for the party. President Biden will address the opening night to rally supporters as he formally steps aside in favor of Kamala Harris. Economists expect that China's commercial banks will keep their loan prime rates unchanged today after making that 10 basis point cut in July. Let's bring our China correspondent Min Lo for a look ahead. So is there any chance of a surprise today?
Yeah, well, we don't expect the banks to lower their loan prime rates further, given that their borrowing costs from the PBOC has not declined further, because they just cut the loan prime rates by 10 basis points each for the 1 year and 5 year in July. That's after the PBOC had cut the 7 days reverse repo rate by 10 basis points as well. But in August, there was no change in that short-term benchmark lending rate, so we expect the loan prime rates to hold steady, 3.85% for the 5 year and 3.35% for the 1 year. The PBOC has delayed the announcement of the MLF rate this month from last week to August the 26th. Now, we believe that's an intentional move by the PBOC to try to de-link the loan prime rates from the MLF rate. That's why they are delaying the announcement of that until after the loan prime rates have been announced. We're expecting more cuts from the PBOC of 10 to 20, maybe even 30 basis points in the fourth quarter of this year, depending on how the Chinese economy performs, and also just because markets are pricing in more cuts from the Fed as well, and that would then open up more room for the banks to also cut their loan prime rates correspondingly.
We're seeing kind of a race to the bottom when it comes to these price cuts across property sectors in some cities in China now.
Yeah, so a race to the bottom happening. That's after at least 10 cities have either scrapped or relaxed these price guidance on new homes. Now, these were put in place to prevent price gouging at a time when China is experiencing a property boom, which seems like so long ago now. But it was meant to prevent price gouging at that time. And during the downturn in 2016, it helped new home prices stay resilient, even as we see second home prices free falling. And that has since created a price distortion in the market. If we show the next chart on the prices, the difference in prices between new home and second-hand homes, that has led to a fundamental shift in buying patterns, with more and more buyers actually choosing to buy second-hand homes last year for the first time, just because they are so much more value for money and there isn't a risk of the homes not being completed as well. So now with the cities rolling back these price cuts, we are seeing more developers offering steep discounts. Some properties in Beijing, for instance, asking for prices that are 31% below the government-guided price. The Shenzhen government had approved a 29% price cut to the unit price of a property compared to its price a year ago. That's likely to force its adjacent property to also offer similar cuts as well. So this might have the unintended consequences of, in the short term, causing some buyers to stay on the sidelines as they wait for the bottom. But over time, we might see a new equilibrium in the market as more buyers come in and as prices continue to fall.
Bloomberg's China correspondent Min Lo there in talking about the Chinese real estate market, and we're watching property prices here in Korea too. A whole different story, because South Koreans are expecting their housing market to heat up further. That's according to a Bank of Korea survey, which is likely to boost bets that the central bank holds rates on Thursday. Korea economy editor Sam Kim joins us now for more. Sam, a perennial issue here in South Korea, this speculation over the real estate market. What's going on?
Well, basically, the consumers are coping with the elevated interest rates, and they are expecting there's going to be a cut sooner than later. If we go back a couple of years, there was a steep correction in the housing market that pushed down the prices of everything, including the homes in the posh neighborhoods of Gangnam in Seoul. And the government had to come in with rescue efforts for some of the developers that were building mega complexes of apartments. Now that's paid off. And the Bank of Korea also had to slow down the pace of its rate hikes. And it's eventually come to a halt in terms of tightening. It's been about a year and a half since then. Now they're expecting a rate cut at some point, the consumers. So they are coming into the housing market back again.
But if expectations are getting ahead of actually the Bank of Korea doing anything, I guess it really leaves less leeway for policymakers to act.
That's right. That's why a lot of economists, actually every one of the economists that we've spoken to, expects the BOK to hold its rate this Thursday. But that doesn't mean that it's going to be on hold forever. We're expecting, some of the economists expecting October cut, if not later. It's come to a point where it's been on hold for such a long time. It's kind of weighing on some of the micro businesses, and the developers' credit risks are still lingering. So a lot of people see that, hey, they're going to cut at some point. So why don't we go into the housing market right now? Yeah.
When it comes to the positive aspects of the South Korean economy, though, the job space looks pretty good, right? Is that also giving some support to the idea that the BOK doesn't need to hurry?
Oh, that's right. They're in no rush right now. I mean, you hear so much about the semiconductor market doing so well, and Korea happens to be one of the biggest makers of semiconductors, and there's an export rally that's helping the economy expand faster than they were previously expecting. So the BOK feels like, hey, I mean, if we cut the rate, it's just going to fuel the economic momentum more. Do we really need to do that more right now? You know, why don't we focus on inflation, the housing prices? Because, you know, the household debt, honestly, is too serious in Korea, and it's a country that's notorious for having one of the highest debt to GDP ratios in the world, along with the Switzerland and Australia.
Our Korea economy editor there with Shery, Sam Kim. Let's take a look at the state of trading across Asian markets. We're seeing that leadership when it comes to Japan equities. Of course, a lot of focus and perhaps a little bit of distraction when it comes to watching with what goes on with 7&I today. But certainly that weakness of the US dollar is driving some of the positive sentiment here in Asia. The Nikkei 225 up by 1.2%. We're seeing a little bit of a laggard situation when it comes to Australian stocks. Some of those stocks that we're watching, including the likes of ANZ, Westpac, some financial updates and numbers from those big financials today. The Kospi is up by about 0.7%. We have seen just a sort of milestone after milestone being hit for global stocks, right? The sort of global bull market back in full force after the sell-off of a week or so ago. The equal-weighted S&P 500 hitting that record high. The S&P 500 within just 1% of a record high now. And when it comes to this part of the world, Asian stocks have really clawed back those losses from the recent market sell-off. On the currency side as well, EM currencies, the MSCI EM currency index is at a record high, despite, of course, some of the ongoing concerns over China's economy. Let's get some analysis now with Bloomberg's MLive strategist, Mark Cranfield. So, Mark, you know, these markets have very short memories, right? We even see a number of carry trades being back, including the yen carry trade, like nothing ever sort of happened. Are the risks still sort of underlying? Or are we seeing so much more conviction that maybe the Fed can pull off a soft landing here?
Yeah, what you're getting is a slight change of view here from traders. First of all, they're certainly confident that the Federal Reserve is going to go ahead and lower interest rates. That's certainly having a negative impact on the dollar across the board. The yen carry trade pretty much disappeared. We saw that data from the CFTC, which shows that all those yen short positions, which were so disruptive at the beginning of August, well, they've all gone. In fact, traders have actually gone net long very slightly on the Japanese yen. So there's no need to worry about a big disruption caused by people covering positions again in that respect. And then you've got in the background, which is very important for Asia, you've got the euro currency now gaining some serious traction. Typically, the best periods for Asian currency performance is when the euro is also very strong. And you've got euro dollar at the highest levels we've seen so far this year. It's approaching the 111 level. People are looking ahead and they think that the ECB actually may lower rates more slowly than the Federal Reserve. And so that's obviously good for the euro currency, and that's spilling over to any currencies which fall within its orbit. The euro is typically the second largest currency in most baskets. So that would affect the Korean won, the Thai baht, Malaysian ringgit, Singapore dollar, all of those kind of currencies which have been lagging behind a little bit are now getting serious traction thanks to the euro. And obviously the fact that the yen is more stable is helping as well. So if you put all that together, it's a great time for Asian currencies, and there could be quite a way to go because the euro is still relatively undervalued. There could be more upside as we go through to September when the European Central Bank next meets.
I wanted to take a closer look at the yen, Mark, because take a look at this chart. Hedge funds turning bullish on the yen for the first time. This is the first net long position since 2021. We've seen the yen gaining against every G10, every major emerging market currency as well. The aggressive unwinding of these carry trades. Do you worry, I guess, about how much escalation we could see in yen strength without risk coming back in?
It's certainly less of a problem when you consider that those short positions, they were the disruptive force in the markets in that first week of August when we saw Japanese equities get absolutely trashed because the yen carry trade was being unwound. Well, there's no more carry trade. It's pretty much gone. Wherever you look, we're almost back to a neutral situation. So from here, it's going to be much more orderly. It's unlikely that people are going to be building up huge positions in the yen one way or the other. It takes a very long time to build up the kind of exposure which we saw back in the early part of August and in July. So this week we've got Governor Ueda. He's going to speak to the parliament. It's the big event in terms of Japanese markets this year. He's likely to hint that there's more rate hikes to come, but in a gradual process. So the yen is unlikely to have a really fierce reaction to whatever Ueda says. It's likely to be more orderly. So that means that the yen currency is more likely to move in line with what's happening in the G10 space rather than can be completely outside of it. So from that point of view, it won't be too long before people are thinking that the major currencies are pretty much moving in tandem. The euro more likely to take the lead, and that means that the disruption from a big yen move is probably something we don't need to worry about for some time yet.
Bloomberg MLive strategist Mike Cranfield there. Coming up next, we'll be having a closer look at how Australia's efforts to curb immigration are hitting the nation's top services export. Of course, that's international students. The Migration Policy Institute joins us next in Sydney. This is Bloomberg. Take a look at how Australian assets are tracking. We're just about 45 minutes into the start of the cash session. We are seeing equities broadly higher ahead of the RBA August meeting minutes. We're also seeing that rebound across mining shares as well. Iron ore staging what could be considered, I guess, a modest recovery. Those minutes out at 11:30 a.m. from the RBA here in Sydney. But of course, a lot of this being supported by a very buoyant session on Wall Street. Still, these bets that the Fed will both execute a soft landing and put through the start of the easing cycle, very much a driving narrative as we get into statements expected from the Jackson Hole Symposium. Bonds, though, potentially seeing a little bit of risk. We're seeing that fall into those RBA minutes. We're getting a pricing when it comes to Kiwi bonds as well, but certainly potentially a little bit more further downside that could be in play for Australian bonds as the Fed and the RBA guarding against the inflation picture as well. That hawkish bias still very much maintained by the Reserve Bank of Australia. Well, the country is also taking steps to limit the number of foreign students as part of a broader effort to rein in surging immigration. Critics say the plan risks crimping universities' revenues, potentially hurting global rankings. Bloomberg's Paul Allen has more from Sydney.
International students are a fixture of Australian universities. After a sharp slowdown during the pandemic, they've returned in force, with 700,000 arriving in February. A staggering 1 in every 33 people in Australia is here to study. Tertiary education has become a river of gold, worth $32 billion in exports last year, trailing only iron ore, coal and gas. However, those students also need somewhere to live, and are now in the crosshairs of a broader political debate over migration and housing. The government is proposing a cap on student numbers. The exact numbers not yet known, but the idea has bipartisan support. The peak body representing Australia's universities is accusing both major political parties of using foreign students as scapegoats ahead of an election due next year.
Using students as cannon fodder in a poll-driven battle over migration and housing simply doesn't add up.
The universities have a strong motivation to preserve the status quo. Highly ranked schools, including the University of Melbourne and University of New South Wales, rely on international students for a third of their revenue. That income stream would dry up, and they argue research funding would dry up along with it. Paul Allen, Bloomberg, Sydney.
Joining us now is Elizabeth Collett, who's a Global Fellow at the Migration Policy Institute. She's also a member of Australia's Ministerial Advisory Council on Skilled Migration. Elizabeth, great to have you with us. And as you allude to, there are sort of multitudes to this debate, right? Whether you're looking at this from an inflation, a dwelling inflation or overall inflation point of view, from a growth point of view, with this being, of course, such a massive component of GDP growth for Australia and for labour market and productivity. Do you think the debate is being framed correctly and accurately at this point?
Well, Australia is not the only country having this conversation. You've seen similar spikes in numbers of international students, not just post-pandemic, as those who couldn't come to study arrived when the borders reopened, but also because numbers of international students in, say, the big four across, that's the US, Canada, Australia, and the UK, have increased significantly over the last decade. So bigger questions are being asked about the sustainability of this as an industry, the credibility of the education outcomes if there is that huge growth and that huge contribution. And also, you know, how will universities fund themselves if they're not able to use international students? So there are bigger questions about the shape of the industry long term. And I think part of the challenge here is whether that conversation has taken place before these policies have been put on the table, with a focus on cutting net overseas migration rather than thinking about the shape overall of the international education sector and what that means for Australia, both in terms of an export industry, but also as a source of human capital development and the future skills workforce of Australia.
It sounds like perhaps you're more concerned and focused on the issue of credibility and higher education standards, right? And maybe if rules need to be tightened around those elements. Do you think there is scapegoating going on when it comes to blaming immigration and students in particular for the contribution to broader inflation and cost of living concerns?
So it's a really complex issue, and I think one of the challenges is that students have very, very specific impacts on housing in particular areas of university campuses, but there are broader housing constraints across Australia. So how do you think about where those interactions take place? Students also have an enormous contribution to make to the local economy in their own consumption and can be a job creator both within universities and in those localities. So there is a positive contribution of students, which I think is broadly recognised across Australia, that having international students is a good thing. The policies that have been so far put in place by the Australian government have focused much more on the credibility of the industry, raising language standards, for example, amongst applicants, taking a closer look at higher risk providers where they're not sure of the quality of the education being provided, and putting higher fees in place that are designed to sort of dampen demand towards those who are more committed to the objective of getting an education. Those things are meant to shape the industry a little more towards making sure it retains that credibility and that outlook. The cap that's now being proposed is a little more of a blunt instrument that is designed to sort of limit and impact net overseas migration overall. And for universities used to planning years ahead and thinking through their research objectives and how they manage their budgets, putting something in so quickly may have an outsized impact, certainly on those economies that are most deeply dependent on international students.
Are we going to see an eventual impact when it comes to university rankings?
I think it's too early to look at university rankings. You're also seeing quite significant policy changes happening in other countries. So, for example, Canada put its own cap in place a few months ago. The UK has changed rules to limit the number of dependents, that is, family members who are able to join students. And these are having their own impacts on how many people are going to some of those bigger markets across the world. So it'll take some time to really figure out how that's going to shift, and particularly with the US election coming up and uncertainty about whether a change in administration would lead to a change in rules over international students. I think it's too early to tell what will happen to the overall rankings, but you are seeing newer entrants into the international education industry. Some European countries have seen growth in the number of international students in the last year or so, having dampened down themselves during the mid-2010s. In Germany, France, Sweden, Netherlands have all seen increases. and some emerging countries that haven't necessarily have large international student populations, but have seen significant growth. Philippines, Chile, Argentina will be examples of those. So it might be that there is less focus on the big four and a more diversification of the trends, but I think it's too early to tell what those impacts will be. Governments tend to panic when the numbers are too high.
So when it comes to this blunt tool by Australian authorities, what does that mean in terms of the composition of international students that we could see in the future?
Well, the previous set of policies were really designed to look at lower quality education providers and didn't really affect the so-called group of 8 in Australia, the top universities. The cap would then theoretically affect those universities more. So it would be much more of across-the-board cap. And that would then, I think, impact the ability of those universities to invest in future research, invest in teaching, loss of jobs. So there are, I think, some genuine concerns from the education providers that they haven't had time to really think about what this means or adjust for it or make their own, I think, their own planning that would help for this. They will just see a shortfall in the next year. So I think you will see an impact on all levels of education provider should this come into effect.
Elizabeth Collett, Global Fellow at the Migration Policy Institute. Really great to have you with us. We'll have more every week on Australia Ahead Tuesdays at 10:40 a.m. in Sydney. This is Bloomberg.
Take a look at how futures are setting up after we saw that ongoing rally on Wall Street. 8 sessions of gains for the S&P 500, the longest winning streak this year. When it comes to TAIEX futures, we are pointing to the upside of 0.8%, while China A50 futures also finished on the upside. We're in South Korea all week. We're seeing the Kospi also gaining ground at the moment, being led by financials and tech companies. Of course, we have the BOK rate decision coming up this week, but that's it from the Asia trade. The China Open is next. This is Bloomberg.